Today, investors are looking for more than just accounting profits. They want to see whether banks are really creating long-term value. In our study on publicly listed Philippine commercial banks, we looked at whether traditional accounting measures, like ROA, ROE, and EPS, truly explain shareholder value, compared with value-based measures such as economic value added and market value added. Our findings highlight what really matters to investors, and what banks can do to strengthen investor confidence. Traditional ratios mainly show past profitability, but they don't always reveal whether banks are creating wealth for shareholders. Economic value added, or EVA, looks at whether profits are high enough to exceed the cost of capital. Market value added, or MVA, reflects investor perception, how the market values the band compared to the capital invested. These measures help investors see whether a bank is truly delivering long-term value. In the Philippines, commercial banks are financially stable and important to the economy, but shareholder value has remained relatively low. Higher credit risk and uncertain market expectations have reduced investor confidence. When this happens, share prices stagnate or fall, even if banks are operating normally. So the challenge is not only about profits, it's about convincing investors that banks are creating sustainable value. Recommendation: we recommend that banks openly report EVA and MVA alongside traditional ratios. By showing whether returns exceed the cost of capital, banks give investors clearer insights into real value creation, not just profit numbers. This improves transparency and builds trust. Banks should prioritize activities that generate returns higher than the cost of capital. This means better capital allocation, disciplined lending strategies, and focusing on sustainable profitability, not just growth in size. To improve market value added, banks need to communicate more clearly with investors. This includes explaining strategy, risk management, financial resilience, and growth plans. When investors understand where the bank is going, confidence rises. Strengthening risk governance, especially credit risk controls, helps reduce uncertainty. Lower perceived risk leads to stronger market valuation and higher investor confidence. We also recommend encouraging regulators and institutions to support the use of EVA and MVA across the banking system. This aligns banks and investors toward real, sustainable value creation. Our study shows that shareholder value in Philippine banks depends not only on earnings, but on how well banks create real economic value and manage investor confidence. By embracing value-based performance management, Philippine banks can strengthen investor trust, enhance market valuation, and support long-term growth. This policy recommendation video is based on our thesis on economic value added, market value added, and traditional accounting measures on shareholder value of publicly listed commercial banks in the Philippines.